Hey guys, Doug the Retirement Guy here. First, I want to say thank you to all the subscribers who have joined us this month. Welcome to the channel. Welcome to the club. We just try to give you valuable information each and every time we put a video out, just like today. Let's get into today's video, and this is from Rex Shares. This is Rex Shares opened up 4 new different ETF funds that are all paying weekly. It's kind of the big thing out there right now is that people are jumping into the weeklies. ETFs are opening up ETFs that are weeklies. So we're covering them all. We're buying them all. So we're taking the hits. We're showing the good, the bad, and the uglies. And that's what we're doing here today with Rex Shares. Let's get into it today. So first off, who is Rex Shares? Well, Rex is a financial and a leader in providing exchange traded products, ETPs. They specialize in alternative strategy ETFs and ETNs. They have over $8 billion in assets under management. So we're not talking about a small little operation, but they are doing a lot of things, pioneering the micro sectors. They're really doing things special that other companies are not able to do or don't want to do. And to me, they're a little bit late to this party of the weeklies, but they offer monthly and weekly dividend payouts. So what's happened this time? Rex came out, made their announcement basically near the end of May, started selling the products primarily in the month of June. And what they're really doing something different than a lot of other people are trying is they're trying to get growth and income from their ETFs. So they've opened up 4. I do expect, and I've talked to them, I do expect them to be opening up even more. So we have one that's doing off the Coinbase. We got another one that's doing MST, got Nivea, and then we have Tesla. So really the 4 strong pieces they're getting into right off the bat. So let's break down each one of them, take a look at what's good, bad, and ugly, and show you what we have done so far. Let's take a look at the goal of the fund. And Rex does something very unique. They are trying to do a balanced growth and income for these funds. So basically, half of the portfolio seeks to generate that weekly income that we all want via covered call strategy. Now, they're going to write call options on half of the portfolio in short term and out of the money contracts. They're seeking to generate consistent weekly income by capturing basically the volatility of each and every one of these funds. And when you looked at it, each one of these are very volatile, as we've dealt with. So they're going to be writing put calls to cover the losses. They're going to be covering calls to capture the gains, and so on. Now, the other half of the portfolio will remain uncovered, which is allowing to capture the upside potential of the stocks. Because if you again look at these are all again volatile stocks that are going to go up, down, sideways, every which way, and they're going to be on top of it. So if I was to do anything at all, I love this strategy because I want the upside, I want the weekly income, and yeah, I want my cake and eat it too. And that's what these guys are trying to do. So I was excited when I saw it and understood what their process is. So their enhanced exposure is targeted at 1.25 times the leverage. So they're trying to gain, and this is right down the middle of the road, 1.25 across the board growth of the daily movement of each one of the stocks. Now they'll always put out there their range is between 1.05 and 1.5, so 1.25 is dead center right in the middle, but it gives us an idea of what they're trying to accomplish. Half of the portfolio provides that uncapped upside, and the other half is going to try to get you that weekly income from call premiums. And then when you add those two together, you got growth and income without compromise. So this is why I love this package. If it does what it's supposed to do, we're going to get our income. We're going to get our growth. So let's take a look at each one of the stocks a little differently, a little more involved. And the first one we're going to start with is the Coin Growth Income ETF, better known as COII. So every one of these are going to pretty much say the same thing. They're going to invest in the common stock of Coinbase Global, which on the NASDAQ is COIN, and try to get between that 105 and 150 daily percentage change of that common stock. And then, of course, they're going to try to pay out the weeklies. We look at the holdings. They do have a ton of money that they've put into the treasury bills, which gives them a regular interest return upside. Very common, most ETFs will do that. But then you look right below it, they have the shares that they have a call on. A little farther down, they have the put on some shares. So they're doing exactly what we're expecting to see. But I wanted to show everyone that they do still have the treasury bills that are giving them a regular cash flow once a month payment from those investments. Now, Coin has only been out for 12 days. So we're just showing you this at the start because a lot of this knowledge that you're going to give you here is so new and is so it's like a little baby. We just had a baby 12 days ago, so we know it's not going to be able to walk, not cry, it's going to not crawl. So really, it's giving you an idea of where we're at and what's happening. Their average right now is $24.81 in those 12 days is the average price of the share. They actually have paid their first dividend of 30 cents. So it really gives the computer estimated dividend about 58%. Now these are going to change as we get more data, more information. We'll be able to calculate closer to what the dividend hardcore is, but right now we're about 58 cents. Now we know this week Coin had a huge upside and there was a lot of volatility in it. And when the war kicked into with Israel and Iran and all that, stuff kicks in, Coin will definitely have a big volatility move up, down, and sideways. So you look at this stock where it started at and getting all the way up to 27.68. So let's get into some more data of this. Is the expense ratio is 0.99%, which is very common for a weekly paying fund. The fund started on 6/4 of 2025. So the performance right now in 5 days, it's up 18.47%. Over the 1 month so far, which is only 12 days, is 10.21%. So again, in the past 12 days, the average 24.81. The bottom was 23.33. The current price of 27.68. Now our computer's spitting out a buy point of 24.33. So it is below the 12-day average. And this big spike that it just took in Coin, we've seen it with all of our other weeklies as well. So we're saying right now, it's not a time to jump into on this one until it comes right back down, until you get down to that $24 price point. So we'll look at MSII, which is the MSTR Growth and Income ETF. So this one's going and investing in the MSTR. We look at the holdings. Again, you're going to see the treasury bills. You're going to see the first government obligations, and then you see the stocks of the MSTR with calls and puts, both sides of the fence. So like I said, they're trying to gather the upswing and the downswing across the board. So when we get into this one, again, this one's only been going for 12 days. Their average price is $24.60. They've paid a first dividend of 14.5 cents. And their dividend is coming in a computerized report of 31.4 cents, or excuse me, 34.4% for a dividend. Now you can see that they've had a little bit of a rocky road. They've had some higher points, lower points. So again, this is 99.99% for expense ratio. The fund inception is started on 6/4. Their performance is not as good. MSTR definitely, I've seen this again in other weeklies. It's had a bad week. It's not been strong past couple weeks. So it's down 2.1% for 5 days, down 3.6 cents those 12 days so far. We'll call it 1 month. The low point or the average is 24.6. The low point was 23.8. It's at 24.45, so it's below average. And the computer spit out a buy point of around $24. So again, with this data, with being so new, I'm not one to jump in and say, hey guys, 24 is the rock bottom to buy at, but we're trying to find what this thing is going to do and where it's at. And the computer definitely said it likes $24 or less. It's definitely below the average and only 45 cents below where it's currently trading. The next one is the Nvidia Growth and Index. Same thing. It's doing it with the Nvidia stock. We show you again that it has the bills, it has the calls, it has the puts, it has everything that we're looking at. Definitely a lot of money poured into this one, $4.8 million in just treasury bills alone. So they have some money that they've put into this stuff. So it's here for a long haul is what we're trying to show along with that point. So let's take a look at the Nvidia Growth and Income Fund, NVII. Now this one has been out for 17 days. This is the very first one that they put out onto the market, and basically is kind of the platform that they all built around. The average price right now is $26.41. They've paid an 18.18 cents average because they've actually paid out 2 dividends already. And they're kicking in with a 36.1 computer generated dividend. When I say a computer generated, it's just calculating out with the data that's in there to kind of see overall what we should get in 52 weeks down the road. When we look at their chart, this thing is started, took off, dropped down, and then took off and has continued on. So it's having a nice solid growth, and it's showing that the half program that they're doing is paying dividends, because is this thing here is giving you the dividends on one side and it's picking up growth on the other. So the stock is taking off. Standard 0.99% for expenses. This one came out at the end of April or end of May, 5/27. 5-day performance lately is down 0.83%. 1 month it's up 6.97%. Like I said, this 17-day average is 26.41. The bottom the computer put out is 25.21, and the current price of 26.84. And it's right in line. The computer's putting out telling us it's a 26.45 buy point. So we're real close into this market. And I kind of agree with this one. I kind of like this one, saying, this is where you want to be. I would love to be in there at 26.45 and collect some nice dividends and go from there. But again, 17 days, nowhere close to time to even make decisions and calls. I always like to see us get at least 30 days, 60 days. And then what we do is 8, 9, 10 weeks into it, we really can see, hey, these are the hardcore numbers to work from. The Tesla Growth and Income, TSII, investing in common shares of Tesla. Now we know Tesla's a very volatile company right now. It's up, it's down, it's sideways. And the other thing is they've most of the weeklies paid a very healthy dividend this week, and we'll see what these guys have done. Standard operating procedure, so nothing crazy. This one has 1.5 million in treasury bills. They have $679,000 in cash, so that means they're probably going to be buying some more shares, getting things involved that way. They do have the calls and the puts out. So this one again is 12 days. The average is 22.96. They paid a 30-cent dividend, very, very strong. Computer, of course, going to spit that out, 67.6% dividend, so very positive that way. The 0.99 expense ratio, this one came out on 6/3. Performance in the past 5 days, 0.65% upswing. Overall, down 6.77%. So they're trying to make up for that very beginning fall at the beginning. 12 days, 22.96 average. The bottom is 20.49. And I think that's just strictly because it dropped so hard on the 5th, and you know it's come up from there. 23.31 is the current price. Computer spits out it does not like anything above $22, so it likes you to be in that $22 range. So again, we'll have to watch exactly what this fund will actually want to do and where we want to go with it. But Tesla right now, I do expect that price to go up and down. I want to see the dividends kind of give us a nice return on the dividends and move forward with this one. So let's take a look at the ETF lineup that we have, and pretty much just repeating everything that we just went through: the coin, the MSTR, the NVIDIA, and the Tesla. Gives you their current price per share, and then what their so far the targeting of the dividend is coming out to. And the fund has an average of 48.28% dividend. So if we're getting growth and a 48% dividend, this is definitely going to be something we're going to want to stay in touch with and watch, and probably be strong for a lot of retirement accounts if we can get both sides of it. So we're going to stay on top of this one. So Doug's picks, here's our lineup. So we just sat down and said, let's put $1,000 in each and every one of the accounts and build a brand new Rex portfolio. So we did that. We did not follow the computer reports. We just went out on that very first day that we could buy, and we bought the shares. So we're kind of one of these guys of the pioneers. First guy through the door is probably going to get hit with the most NAV, most problems, and let's see what we get. So we bought the coin, MSTR, NVIDIA, and Tesla, pretty much about 41 shares or 40 shares a piece. So right there kind of starts off our program. And our stock value, after only just a few short weeks, we are up $135 or 3.39%. So coin, again, had a great week, that which gave us the big return. And then NVIDIA gave us a very strong, hopefully a steady return. We did lose money on the MSTR, and we did lose money on Tesla across the board. But the other side of it is we were able to collect $45.40 of dividends, or 1.13 percentage points from a dividends. So when we put this information into the computer, it says you should be collecting about a 59.03% dividend over the next 12 months or 52 weeks. So we're expecting to collect $2,300 in dividends from this program. So right from the bat, I have to give Rex 2 thumbs up, because we do have growth stock value and we do have dividend income. So we're going to keep watching these on a regular basis for you. So this will just give you a summary, and it'll change more as we get down farther up as we update these on a regular basis. But our $4,000 investment is now worth $4,135. So we're up $135 or 3.39%. We've collected $45.40 or 1.13% for the week. And the computer's generating a $2,361 a year dividend income, so at 59.03%. Now, I know a lot of you are going to ask and say, well, why don't you just drip this? Why don't you drip that? Because in the retirement channel that we do and how we do things is most of the dividends are paid for us to live on. So we want to take this money and invest the money into it to get the dividends to pay our bills to live in retirement. We are not here. If you are here to grow a fund or get better, dipping is definitely a way to go with it. And as we get down farther, we'll probably add another screen for this for you so that we can say, hey, here is how would it happen if we dripped it all. So again, I'll give you guys one more quick little answer. What we're trying to do here, is this a good investment or a bad investment? We bought all the funds on June 6th. We put $1,000 in each fund for a $4,000 total. And we're looking for a weekly dividend payout so that you can either do the regular cash flow, which we like, or you can reinvest it. Our goal of this is to get a 25% return on the dividends, which we're well above that. And I would like to see a 5% growth in the total fund. And we're close to that in the first week. We're only 2 percentage points down. But this is the things we're going to watch over time. Guys, this is Doug, the retirement guy. I hope you like what we're doing. Give us that thumbs up. Don't miss any of the videos. This one's going to be on a regular repeat of, we're going to constantly be updating at the end of every week to give you an idea how Rex is doing. Leave us a comment if you like what we're doing or what you'd like to see, and we can help out. We'll answer all the comments, good, bad, and ugly. Everything helps the channel grow, and you can as well. If you want to go down in the description, you will see where you can help support the channel by Patreon. Become a free member, make a quick little donation, or join and get a regular membership that gets you more additional information that we put out there. Guys, I want to thank you, and we'll see you next time.